So this is a continuation of the previous video that I did. You can check out the previous video right here. This video that you're watching right now is the second part of that video. So please go check that video out first. This is the second one. This is the continuation of that video. And the reason why I break it up is because the video was really long, but I wanted to cover all the topics and cover all the stocks that I wanted to cover to share with you guys. So go check out that video before we get into this one. Now, the fourth company that we're going to talk about, we are going to talk about Amazon. Okay, this is a company that I haven't really purchased a lot more of, but you know, Amazon, what can I say? Amazon is Amazon. You know, that's all I can say with Amazon. They are such a huge company by now. You know, they make so much money. You know, like the model that they use in terms of charging people yearly to be able to get their package in 2 days. I think that's great because most people don't use it as much as they should, but they still get to have that revenue, and they have so much other things coming on for them. You know, again, I think the company, they are 1.7 trillion right now. Over the next, 5 to 10 years, I would say they would easily get to $5 trillion as well. They're hitting up a lot of markets. They're coming for UPS, USPS, FedEx. They're coming for their business. Self-driving is going to make their thing a lot better. You know, robo-taxi, Tesla bot is going to help them out a lot. Eventually, Jeff Bezos and Elon, they're going to be cool again. They're going to buy a lot of Tesla bot to get the things done. You know, so like, a lot of good things is still to come for Amazon. So if we take a look here, this is Amazon's pattern right now. Let's take a look at it on an annual basis. Take a look at it on an annual basis. Since 2016, you know, that hyperchart has been covering this. You know, they've grown their revenue. As you guys can see this, they've grown it quite sharply. From 2019 to 2020, it's gone up a lot. They have a total revenue of $386 billion every year. 386 billion. They make a ton of money, you know, that they bring in total. So let's take a quick look here. Their net income, they make a total of 21 billion. So, I mean, it looks like they spend a lot of money to be able to make that happen. But again, those expenses over time is going to turn into asset, because when you spend money to make money, those things that you spend the money on, is not like it just goes away. You know, over time it will start building up, like Microsoft, like the cloud services, AWS and all these things. It just made that happen in the past couple of years. So I think over time they're going to be just fine. Let's take a quick look again at the debt and total asset, because those are some of the numbers that is important to me that I like to look at. So we take a quick look here. Look, you guys can take a quick look at their total asset. See, their asset is growing up steadily over time, pushing up to about $400 billion worth of assets. If you look at their total debt here, you know, their total debt is way lower than their assets. You know, total liabilities also is way lower than the asset, and they're not really bringing down their share counts. They keep diluting shareholders, but as a company grow, everybody grows with it. Some tech companies like Apple has so much money, they don't even know what to do with their money. So, you know, let's take a look at this on an annual basis. You know, they're pushing close to 400 billion here for their their total asset. And you know, all the other numbers, it's going up, but it's way lower than the total asset. That's the most important thing that I like to look at. So the fifth one that we are going to talk about today is Adobe. Okay, Adobe, it's a company that we all know. I mean, growing up, you know, like growing up, we used Photoshop a lot way back in the days, and Adobe has grown now from the Photoshop days to a whole suite of products, you know, that they make today. So here is my current holding for Adobe. It's not really much, but I'm looking to take this up to the next level, buy a lot more of Adobe, especially on the days that the stock market goes down. The reason why I'm doing that is because like they have a lot of products, especially in the creator economy, whereby thousands and thousands and thousands, hundreds of thousands of people pay them every month to be able to use either Photoshop, either all the platform that they have for video editing, like people doing thumbnails. A lot of people use Adobe Creative Suite. They use a lot of the product from Adobe. So I think that is a big strength for them. Like the amount of money they make from that product it's continuing revenue. It's going to keep on coming in, and they have the ability to raise that price. I think that is a good thing for them. Over time, they're going to be able to increase it, and then their market cap will go up over time. I strongly do believe that. So if you take a quick look at all the metrics here, so far the metrics is looking good. Let's take a look. Let's look at it on an annual basis. So far, all the metrics is looking well. Revenue is going up. Net income is going up. You know, the profit margin is great. Can you imagine the profit margin is up by 50%? This is why, like, I'm starting to get more into software companies. You guys are gonna see the rest of my top picks for 2020. A lot of it is in tech, and that's because as the market fears inflation, tech stocks gets beaten down because, you know, it costs them more to be able to do their business. But then again, investors seem as if they forget that they can raise prices to be able to compensate. So a lot of these companies have the ability to raise their prices, you know, on the products and services that they provide. So, you know, I think over time, like with numbers like this, revenue going up, you know, everything growing up like this, over time, Adobe would do just fine, and they're going to be a bigger company in the next 5 to 10 years. So let's take a quick look here, and the numbers look great. The numbers look good. If we take a quick look at the balance sheet here, you can see that the total asset is going up. It goes up steadily over time. And the sweet spot here, look at the sweet spot. They have total debt of $4 billion on almost $28 billion of net assets. This is the kind of company that I like. I like when companies have less debt than their total asset. Yeah, you can look at the temporary stuff, whatever, but for me, I like to look at the bigger picture, the whole thing. You know, the asset that the company have is going up. The debt is growing as well. You know, the debt is growing, but it don't look like it's anything that's not manageable. You know, liabilities is growing as well, and then the share count keeps growing as well. Hopefully, over time, the share count will go down. But you know, the numbers, the basic numbers that I like to look at the total assets, and I like to look at the debt. Some liabilities. Liabilities, I don't really stress myself over it, because as long as the company have more assets than liabilities, then we're all good. Even if you add these two together, is still less than the total asset. So the company is looking good. Everything is good. You know, this is why I'm going to be investing more money into companies like this. So you've seen my top 5 now. You've seen the top 5. Now we're going to move the curtain and share with you what the rest of the companies that I'm looking to buy next year, what they look like, why I'm bullish on them. You know, what I did for the top 5, basically you can do that for the rest of all these companies. These are companies that have the ability to raise their prices. These are companies that people use their services. People and companies use their services. You know, the ability, even in case of Palantir, for example, case of Palantir, governments use their services. I mean, a lot of these companies as well, governments buy their products, use their services, you know, governments, individuals, everybody use their service. So, in times of inflation, this company are most likely to get beaten down a lot in the stock market, just because the market perceives them as a little bit more risky, because because interest rate would have to go up. When the Federal Reserve charge more interest, they raise the interest rate. The market perceive it as these companies are more expensive. They have to spend a lot more money to be able to borrow debt, to be able to borrow. So temporarily, markets can beat them down. It could be a year, it could be 6 months, it could be 2 years, who knows? But for 2020, anytime the market goes down, these are going to be my go-to. And I'm going to go here and just put X amount of money into a bunch of them. Okay. So let me show you how I'm planning on doing that. And the way that I'm planning on doing that is by having everything in one spot, which is in my tech sector here. Okay. My tech sector, this is where I have all my stocks, and everything is in one area. All right. So some days where, you know, some of this where I'm starting to build a bigger portfolio of this, I'm gonna just keep on buying a little bit more of them, individually, like Spotify, Salesforce, you know, Shopify, Amazon, DoorDash, all these companies. I'm gonna be buying them a lot more. And anytime we get like a big dip in the market, I will just go in and let's say we put like 1,000, put 500, and that money just gets spread across the portfolio. It makes it easier for me to just go in and buying them individually. It just makes it easier. And as you guys can tell, if you take a look at this list here, most of these companies are tech companies. Those are companies that will get bid down a lot. And, you know, I like the fact that I can just go in and buy a bunch of them in one go, in one spot, like right here. So I hope you get the idea. I hope you understand what I'm trying to share with you in this video. So I hope you get the idea, and I hope you understand what I'm trying to share with you in this video. During times of inflation, stock prices goes, we need to be a little bit more in defensive and do what companies are doing. Like Tesla, for example. Tesla is paying down their debt because they want to be able to be successful in this EV revolution that's going on. You know, like they want to be able to be successful. Think about it. During times of inflation, there's every likelihood that people will lose their job. But the good thing with this inflation time is, you know, there's a lot of job openings out there. There's a lot of jobs, so people will get jobs. The cost of employee acquisition, you know, hiring people, is also going up. So if prices are going up and you're getting paid more from your job, basically it negates the effect of inflation. So you still zero out to be the same thing. So I guess people are figuring that out, and less people are looking for jobs. But if you are looking for jobs, there's jobs out there, you know. So for me, I'm gonna keep on doing what I'm doing, dollar cost average into my general portfolio. And days where tech sector gets beaten down bad, like I usually just take a quick look at the heat map. Let me show you guys right here, and you guys can see a day like today, you know, all the sectors that I've been talking to you guys about, they've just been beaten down like mad. You know, Amazon, Apple, you know, all the finance sector all over here, like they all just got beaten down badly. The only thing that is surviving right now is the health sector. You know, we all know why, because of the Rona. But yeah, so a lot of these companies, they get beaten down badly, and I'm just so happy that I'll be able to just go in and buy all these companies in just one chunk here. Just boom, buy them, and then, you know, case closed. So yeah, I hope you enjoyed this video. Hope get a lot from this video in terms of information. You know, thank you for watching. I appreciate you for watching. Again, if you like what I do, drop a like for me. I appreciate it. You know, subscribe to the channel. I'm trying to grow this community, so subscribe. I appreciate you for that. Until next time, see you later. Love you all. Bye.